Here's a real quick trade that I did yesterday, selling cash secured puts. I pulled down a quick $170 or so. Here's how this trade went down. So today's the 8th of January 2025. Yesterday, of course, being the 7th. The market was up yesterday, so I was looking to sell some cash secured puts. So I'm looking for stocks in the market that have probably fallen against the rise. So even though the market itself was going up, as always, there's going to be some stocks pushing against the trend and falling in price. Now for this strategy, selling cash secured puts, personally, I prefer to trade large cap stocks because if I get caught holding the stock, I want to make sure I'm holding a very solid company that's worth billions of dollars, has been around forever, and hopefully even pays good dividends. So if I do wind up getting called on the stock, it's not some dodgy stock that may disappear overnight. And at least if I'm holding on to the stock for weeks or months, I'm also going to receive dividend payments to offset any potential losses. So I was looking at the decliners in the large cap market, and I could see, coming down the list here, I like the look of FMG. Fortescue Metals. I've bought and sold Fortescue Metals over the years plenty of times, and yesterday it was down close to 2%. What I like about the price of Fortescue Metals yesterday was that the last price was about $17.69, and the 52-week range is between about $15.80 and $29.95, so almost $30. So in other words, somewhere between about $16 to $30. So at $17.69, it's toward the bottom of the 52-week range. In other words, the stock had fallen a fair way and it's down at the bottom of that price over the last 52 weeks or thereabouts. So let's have a quick look at the FMG chart to see why I sold cash secured puts over this stock. So here's the chart of FMG trading at $17.69, and we can see that around that price there has been some sort of support there previously. Because we can see that when the stocks come down to around this price previously, back in August of last year, it kind of hit it and bounced off. Yes, it's fallen back down below this price, tested a similar price, come back up. Fallen back down to these price areas and then come back up. Fallen down again over the last few days, but then come back up. And that's where it was trading yesterday. So in my mind, my opinion is a 2% drop in price around what I figured looks like a fairly good support level is probably not a bad place for me to buy this stock, and I'm happy to own it at that price because around this time last year the stock was trading close to $30, so it has the potential to maybe go back to those levels again. Nobody knows. The bottom line is at $17.69, if I was exercised, I'd be happy to own this stock for that price. And as I was saying as well, I like to own the large cap stocks because if I am left holding this stock, well, coming up to about the 27th, 28th of the month, you can see historically Fortescue Metals has paid somewhere between 75 cents to $1 per share to its shareholders as dividend payments. So in other words, if I sell cash secured puts over FMG, I get exercised, I have to buy the stock, I own the stock, I'm going to get paid possibly somewhere between 75 cents to $1 for every share I own in dividends, which will also help to offset any losses. So with that in mind, here's the trade I took. As always, remember, I'm a private trader. I'm simply showing you factual data of stuff that I've done. This is not financial advice. Doesn't mean because I've done it and it worked for me that it would work for you or that you should do it. I'm simply sharing this information here for educational purposes. Hopefully you get something out of it. Now, given the last price of FMG yesterday was trading at about $17.69, I thought, why don't I sell some cash secured puts around about the $17 mark, which would be somewhere around this area here. So in other words, if the stock falls down below this price, I'm going to buy FMG stocks. I'm going to get exercised on the cash secured put options that I sold. So thinking that that's a bit of a support level for me, I'd be happy to buy them at this price. So I put the trade on. Now the options that interest me the most were these ones here at $17.01, not the $17 one above it, the 17 and 1. Why the 17 and 1? Well, because I know that that's a European style option, not an American style option. So the advantage of that to me as an option seller rather than an option buyer is I don't get exercised prior to expiry day. So in other words, if I sold a $17 put option, that's an American style, anybody could come and exercise their right to buy FMG from me on or before the exercise expiry date, which in this case is the 20th of February, for $17. The $17.01 is a European style option. So, regardless of the price of FMG stock, nobody can come and exercise their right to buy them from me for $17.01 until the 20th of February. So that just gives me a little bit of peace of mind. The market can go up and down as much as it wants. I've locked in an expiry date and I can't be exercised between now and then. So I prefer the look of this option over this one. Now the FMG JF9 option that I wrote has a bid and ask of 50 cents and 60.5 cents. Now, to be honest, yesterday I had things to do and I didn't want to sit around waiting for this trade to go through, and I could see that the last sale went through at 51 cents. So I put an offer there at 51 cents, thinking, well, if someone else has previously paid 51 cents, they're bound to pay it again. The offer's 60.5 cents, the bid is now 49.5 cents. I've come in at 51 cents. I've offered to sell 4 of them. I'm selling to open. In other words, I am selling the options. I'm not buying them. I am selling the right to somebody else to buy FMG shares from me for $17.01 on the 20th of February 2025. So that's next month. It's a European style option, so they can only exercise it at that price at that date. The contract size is 100, which means I'm selling the right for somebody to put their 4 100s, their 400 FMG shares to me for $17.01 on the 20th of Feb. And for that right, I want 51 cents times 400, which is $204. I'm paying brokerage and costs, and I am going to be left with, in my bank today, $168.47.8. So that's how much I'm going to get credited to my bank account if this trade goes through, which it did, and I'll show you, because it's a credit trade. I'm selling something I don't own, but I'm essentially selling an obligation. My obligation, of course, is to buy 400 FMG shares for $17.01 on the 20th of February. And for that, I'm being credited close to $170 right now. So I submitted my order, and you can see that the time I put this trade through was 10:45 a.m. Eastern Standard Time, which of course is 7:45 a.m. here in Western Australia where I live. So 7:45 or 10:45 is when I hit the proceed to order. And it only took 2 minutes for this trade to be executed and to hit the market and for a buyer to come and take me up on this. So that was 7:45 a.m. Western Australia time. 7:47, 2 minutes later, I get a notification that they have sold 4 contracts for the $17.01 put option that expires on the 20th of February 2025 for 51 cents per contract times 4 or 400. So of course, 400 times 51 is 204 minus brokerage and costs. I was paid a total of $168.48 directly into my bank account. Nice. So that's a quick 2-minute trade where I made $168. Let's have a quick look at the numbers. One of the websites I like to go to is timeanddate.com because I like to work out the difference between 2 dates so I know exactly how long I'm going to be in this trade. So yesterday I punched in the numbers. I just actually hit the today button and that brings up today's date, which of course yesterday was the 7th of the 1st, 2025. I then put in the end date, which I know the options expire on the 20th of February. So I know my money is going to be tied up till the 20th of February 2025. And bearing in mind, no money's tied up yet as such. It's not tied up because I haven't been exercised. But potentially I could be exercised. So I need to set that money aside for the off chance that I get exercised on the 20th of the 2nd. I've got that money sitting there ready to go. And I can see that the time from yesterday to the 20th of Feb is 44 days. So literally my money is going to be tied up, although technically not, in this trade for 44 days. Now don't forget, I don't need the money until potentially, I may not need the money at all, but potentially the 20th of February. So literally, I can leave this money sitting in a bank account earning interest for the next 44 days as well, just so long as I've got it ready to buy these shares if I need to in 44 days' time. Now, the other thing I like to know is this trade viable? Is it worth doing? How much money am I going to make versus how much risk am I putting up? Because literally, as a trader, I'm taking risks. We all are. If we trade the market, we're taking risks. So we need to be rewarded for those risks. So literally, if I go to a bank like Commonwealth Bank and say, hey, I've got potentially, $10,000 that I want to invest in a trade, how much would that money earn if instead I put it in the bank? Now I can see that if I go to the CommBank website, their long-term deposits for less than $50,000 are paying about 4.3% for 12 months. That's not that enticing. Now, how much money do I have tied up potentially in this trade? Well, $17.01 times 400 is $6,804. So I need to set aside $6,804 in the off chance that I get exercised on this trade. Now, $6,804 at 4.35% per annum is $295.97 per annum, just under $300. So literally, if I took that same $6,804, left it in the bank at 4.3%, at the end of the year, they'll say, thank you very much, here's $295. Great, thanks. Now, $295.97 divided by 365 days that I leave it in the bank for is 81 cents per day. So literally, if I left $6,800 in the bank, they're going to pay me 81 cents per day in interest, which works out to be about $36 for 44 days. So in other words, if I can make more than $36 on this trade, which is a 44-day trade, then it may be a viable trade because that's essentially what my money would be worth sitting in a risk-free bank account. So, it's risk-free. It's money for nothing. Sitting in the bank, they're going to pay me the interest. My money's not at risk. But it's only earning me $36 over 44 days. So I need to look at the numbers to see what I'm going to get by taking the risk on the options trade. So to do that, I like to come to this website, calculator.net, and I use the return on investment calculator that gives me an annualized return on investment. So in other words, if I take the $6,804 and at the end of it, that money's worth $6,972, because literally it's the $6,804 plus the $168 that I've been paid today. That's the most amount of money I can make on this trade. And I started yesterday, and the trade finishes on the 20th of February 2025. That's when my money's freed up again, so long as I'm not exercised, because I'm making $168. I walk away, I move on to the next trade. If that's how the trade goes, I may get exercised and it may go in a different direction, whatever. But the best case, well, not the best case, but the outlook for this trade is I'm not going to get exercised. I'm going to just get to keep this $168. So what is $168 return on a $6,804 risk look like? Well, it's a 2.47% return. Annualized, that's 22.43%. So that's pretty good compared to the 4% that I would get by leaving my money in the bank. I mean, if you take $168 and divide it by 44 days, it's literally like $3.81 per day, as opposed to leaving it in the bank and getting 81 cents per day in risk-free interest. This $168 divided by 44 days is $3.81 a day, so it's quite substantially more. So that gives me an annualized return of 22.43%. So in my mind, this trade was worth doing, which is why I did it. So here's how the trade looks. So what I've done to execute this trade is I have sold 4 $17.01 strike price FMG put options that expire in 44 days on the 20th of February 2025. Those 4 or 400 I sold for 51 cents each, which is 400 times 51 cents, $204 after costs and brokerage. I've received net $168.47.8 into my bank account. So in other words, I've sold a $17, call it, expiring put option, expires next month in 44 days, and I've received $168 for it. Now, what's my risk on this trade? In a worst case scenario, my real risk on this trade is $6,804, because that is essentially how much money I would need to shell out to buy 400 FMG shares at $17.01 per share on the 20th of February. So literally, if this company went belly up, if it went to zero, whatever, I need to buy these dead shares. Now, of course, my hope is they don't go to zero. Well, that's probably everybody's hope. But that's the real risk. That's the reality. I'm literally putting $6,804 on the table to get this $168. My hope is the shares are trading above $17 and I don't get exercised and I just get to keep the $168. But if they do fall and I do have to buy the shares, my hope is, of course, I can sell call options over them. I get paid dividends over them. The price turns around and goes back up and I sell additional options over them, whatever. So subscribe to this channel, hit the bell notification, and I will let you know when I create another video to show you exactly how this trade panned out, because we don't know yet until the 20th of February. But that's my risk. So here's my risk to reward. So literally, I've just been paid $168.47.8. I'm risking $6,804 to do it. So that's an immediate 2.476% return. $168 is 2.476% of $6,800. So that's my instant return right now on this trade. My annualized return, because I'm holding on to it for 44 days, not 365, is 22.43%, which is a lot better than the 3 or 4% that I would get for leaving my money in the bank, which is why I've done the trade. It just makes sense to me to do the trade. So again, if we look at the numbers, I'm in this trade for 44 days. I've invested $6,804. My expectation is I'm going to just get to keep the $168. So that's an annualized return of 22.43%. If I do get exercised on the stock and I do have to buy the stock on the 20th of February for $17.01, well, I know that historically FMG generally pay their dividends around about the 28th or so of February, and the last couple were about $1, and prior to that was 75 cents. So if I'm still holding the stock, 400 of them, and they pay $1 for a dividend, there's another $400 plus the 168. So I'm in a position where I may slowly start to make my losses back. Plus, of course, I can sell call options as the stock rises. But remembering my personal view on this trade was yesterday, the stock's fallen. It's fallen around to a previous old support level, which I didn't think would get broken. My expectation is I'm going to just get to keep this $170 by February. FMG is going to have picked up again. Off it goes. I keep the $170. I get to free up my $6,800 that I had tied up, and I'll move on to my next trade. So stay tuned, subscribe, hit the bell notification, and I'll let you know exactly how this trade pans out. Thanks for watching.